Hi everybody, and welcome to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. As we will see, the FANGs had been rallying, a number of them back up towards their breakdown valuation levels, but today has erased a good chunk of that strength. So things are pretty much as they were last week. It's almost as if the market said to itself, okay, we've had a breakdown, and now here's the expected rally. But let's get back to business. And this reinforces my point. Being able to reassess where you should be and not be in weak markets can be critical to the health of your portfolio. And this is where our SVA service can perhaps be of the most value. If you are not yet a client and are interested in learning about this methodology, which can help you in times of extreme uncertainty as things are today, then send us an email at info@strategicanalysis.ca and tell us about yourself and your investment journey. It can provide you with the guidance you may need to take advantage of moves in the market like we have seen recently. Anyway, right now we need to take a close look at the FANGs and what's been going on. But as always, before I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, let's start with Alphabet, which remains solidly and comfortably above its MSG price. That's 5.5 times book, and has been holding up very nicely against strong markets and weak. Nice to see. Amazon had broken its bubble price, that's 7.4 times book, and had rendered a sell signal. Very, very recently, it had rallied back up again to its bubble price, but today is pulling away. And I expect that the downtrend probably will continue. The same holds for NVIDIA as it pulled back to its HB6 price there after breaking down some while ago. Look at very, very strong fair market value support, but that may be due to the most recent past quarter where their margins shot up tremendously. That may not be whole. We shall be very interested to see what happens in this immediate quarter to come. Tesla, same story, rallied back up to its HB3 again, but today has set back. Meta actually broke out momentarily. And I thought, well, I wonder if after a period of kind of rethinking and dithering, if perhaps it's back on its track to move back to its bubble price, 7.4 times book. However, today any hopes have been dashed, and we'll have to wait to see whether that was a false breakout or not. Apple continues in its slow downtrend, no change there. And Netflix very much continues its strong downtrend, and certainly today was no exception to what's been going on here. I'm still expecting a drop to at least its mid-super growth price. That's 5.5 times book, but whether that will be enough remains to be seen. Microsoft, I have been expecting a decline to at least its HB1 price. It did rally before it actually got there, but today I think we're moving back towards that level once again. Now, to summarize, The one bright spot among the FANGs, Alphabet, continues to hold fast above its mid-supergrowth price, that's 5.5 times book. As I have said, in comparison with just about everybody else, Alphabet seems to be reasonable value. The shares are still right there above key support, but I repeat, they must hold. Amazon had broken its bubble price support, 7.4 times book, despite that nicely and recently tilted uptrend in its fair market value measure. We have our 3% 5-day rule of thumb signal in place, so that sell signal is confirmed. Amazon has joined Nvidia and Apple, Meta, and Netflix, all of which have broken support in recent weeks, despite that momentary attempt by Meta to regain its MSG price support this week. Microsoft had almost reached my initial downside target. Its HB1 price, or 9.5 times book, did rally a bit, but has not yet reached that key support level at which I might expect at least a tentative rebound. That leaves me with Tesla, which had mounted a second attempt to surpass its HB3 price, or 16 times book. But the HB3 price remains it for the stock. In closing, I hate to sound like a broken record, but I will again remind you of what Jerome Powell said at Jackson Hole. As far as the economy is concerned, the U.S. Federal Reserve Board is navigating by the stars under cloudy skies. For sure, it is clear that the same thing goes for the stock market. No panic yet, but don't get too complacent. Now, more than any other time, investors need to have a solid grasp not only of the rewards that the market offers, but also the risks that are entailed. For now, this has been Ross Healy, Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you next week.